All right, Jay, what we're going to do is I was going to show one thing I like to do to add strength to these models, because your R squared is only 45%. So what I like to do is over on the side is I'm going to add a column, a row at the top, if that's all right.
Yeah.
And so what I like to do is bring data over here to the side to look at some differences in that formula over there. We're going to have to bring it forward, but so what we're going to do is bring in asset turnover for 2 years and compare them. So on Bloomberg, I'm going to say bring in asset turnover. There it is. By, so we got asset turnover. We want to bring it over for 2020. And let's say, let's go back 3 years. 17. All right. So what is the formula? So I always forget this formula. I don't know if we've ever used this formula before, but it's going to be equal BDP. The first part looks exactly like what we've been using. So the first thing you want is the ticker, and you lock in that. The second thing you want is the actual factor, asset turnover. So lock that in, comma, and then you just have to type these things. So it's EQY underscore fund year. I don't know what all that means, but equity, I guess, comma. Then we reference the year, so we want 2020. We've got to lock that row in, comma, and then we type fund underscore per, comma, and then year. Now, if you do quarterly, you can also do the year and quarterly, but you have to add that as a separate thing. So the quarter is like 1, 2, 3, or 4. So you can actually get down to quarterly data, but here we're just going to use annual data. I did something wrong, so BDP, right off from the bat. So there it is. Does that match your number? We can try 2021, but I think you're going to get a lot of error messages if you do that. So 2020. We copy that over. So there you got it, right? So this firm actually got worse. This firm got worse. This one got worse. That one got better, worse, probably because of COVID-19, right? So now what we can do, I'm going to put it right next to asset turnover. I'm going to say ATO change. And I just go over here and I take 2020 minus 2017. I can copy that down. And you remember what we did before over here? We can just add a column here. You just copy that over. And just like that, it's set up. And we've got some error message somewhere. So let's just put -1 on those for right now. You have to go back and fix those. That's the problem with doing something. You can get more NAs. So let's try that. Let's try this. If error, comma, let's just do -5. That work? That looks like to work. Okay. So that should help the ranking. PTO change, and see, that's why I use the titles, because once you get to that, it means it takes like 30 seconds a minute, and you can set these things up really fast. So you can add all those changes, almost anything. Gross margin, is gross margin improving? EBITDA, the revenue, is that improving? You know, you can do that with all these like really, really fast, and then just like that, you copy it over. So now it's in your mix. So the only question is, I might have messed up your solver. Let's see. We want to maximize the 0.67 by changing. And since I put it in the middle of that, that range still works. And the U, yeah, everything's still good. I didn't mess you up that much. So let's solve. Well, we got a little higher, didn't we? We went from 67 to 68. So it actually put 5%. So I mean, it's kind of interesting. You had 0, I think, before on asset turnover. So it actually put 5% there. The one that I found, let me do one more because just out of curiosity. So the one I found that works really, really well is the WAC EVA.
Which you don't have on the board?
WAC EVA spread. So the WAC EVA spread, that's kind of return on capital minus your cost of capital. And just look how quickly we can do this. So we want those 2 years, copy these two over. We got to see if there's any NAs, but we'll use the error message again. Let's put it to provide a return on capital. EVA change. Stop me if I'm moving too fast, but then we just go get that change. So here, see this firm, it looks really, really bad, but they've improved a bunch. So that's really what you're looking for EVAs. So UV if error, comma, I'm going to do -5 again. And so what do we do over here? Boys, look at some of these firms, pretty amazing. 46, how do you improve 46?
Their numbers have been crazy.
All right, so we got the EVA change right next to return on invested capital. So we just insert it. We can just copy it over one of them. You got it. Rerun solver. I mean, isn't it amazing how fast? Super fast. And you're done. It didn't like it. So I've seen some where that really works well. It didn't like that one. If you get a 0% on one, you can just add 2 more, and instead of adding a new column, you can just change this to gross margin change, and not even the change, you know. So how many can you do? It's unlimited. That's why some models have gone out like 50 factors, because there's nothing you can't do this on. The other thing you can do, which I really, really like, is instead of bringing in 2 asset turnovers, bring in like 5 and take the median over the last 5 years. And that way, if there's some noise because of COVID or whatever, if you take the median, then you've got more of kind of what their normal year is and what the firm is normal. So it's really easy to bring in 5 years, right? You just do 2020 back to 2015. And then over here, you just do equal median and go get that. And then error messages don't matter, because if they have an NA, the median just ignores that. So, you know, those are ways to do it. There's almost no limit. So what you get here is that this model you had before we did all this was all dependent on 1 year, a very unusual year because of COVID. Now you can free that up and you can look at almost anything now. You can do it with ROE, EVA, anything that you think is important.
So probably start with margin, return on capital, and risk.
Well, start on the ones you already have. So you got asset turnover, look at its change. You got gross margin, look at its change. EBITDA, the revenue, look at its change. You know, you can take each one of those and just look at the change. And I think that's important to markets. If almost as a firm that's doing well, you want a firm that's improving, and you might actually want a bad company that's improving, you know, turning around. So to me, it's pretty powerful analysis.
Did you get all that, Eduardo? All right, let's do gross margin next. Uh, 2020, 2017.
That's the beauty of that. If you're doing that, you just keep copying this form over.
So this is going to be gross margin. 2017 says invalid field.
Well, copy that, just keep it copied, but- Oh, no, you need to copy, whatever's in AE4, AE3 is not good. Yeah, make sure. Yeah, it's AE3, that's your problem. What's in AE3? Yeah, you don't, right there, you don't want it referencing anything, or you have to have that one equal the previous one or something.
I thought I put gross margin in here, not return on invested.
Well, it's because it's a formula, it wasn't, you copied S, but you should have copied the other column. S is just referencing.
Should I delete this?
Well, you can just do, you have to go further to the left. So instead of doing column S, go further to the left and copy it from, keep going to the left. You don't want those, keep going about 6 more columns. So copy that J.
That makes sense. Yes. Yes. Yes, we're doing gross margin right now. So I'll send you this when we're done. Juan Carlos, we've already done a few things.
I'm not working to see if you can do it. I was supposed to come at 4.
Oh, no worries. All right. So now we got to get our difference in gross margin. Right here? Yes. So insert right at K. Should be able to copy our, we're going to put change. Change in gross margin. And we're going to do equals. $2020 minus 2017. We'll copy that down. A couple big changes in gross margin. Looks like Limonaria lost 20% in gross margin. A big amount of gross margin to lose. And now we will add the change in gross margin here for column U. So copy that column. Insert.
You copy column of 3 to
All right, I'm gonna undo that.
insert a new one.
Looks like it's adding to 139%. Should I run solver?
Well, change the weight to 0 and that would just add it to 2. Start solving this again.
Okay.
Yeah, let's run solver. Now, the other thing you do is you just add a bunch of them off to the right and then come back and do all that editing one time. I'm wondering what you can do. Why don't you try one where you can, you do like a 5-year EBITDA margin and just take the average of that. As your 5 years EBITDA margin. And I think it's just EBITDA on the square level. It might be $50, but you can copy it from over there.
This one?
Don't copy it.
I'm gonna type 5 years of it in there.
Yeah, that's it. Like 20, 5 years or whatever. You go back too far, that's when you start getting too many. You start getting too many. Yes, now you just copy the column before, or at the top of the file. Alright, so now you just next to the margin, just add a column and then you the averages or median. Or you don't do different do median, you don't do average. That's why it's. So I always put it right next to something that's similar, so I can
Kind of keeping up on Carlos.
Maybe that was back to the
Let's see. We're just adding, so we're going back in years to be able to add more data into our screener to be able to get a higher R squared to make sure our data that we're using is relevant to each other.
What's the worst price about 80?
That 80. We're going to shoot for 80, 90, I believe. And we're currently at about 68. So we've got our median EBITDA margin. So we'll add this. Yeah, I can probably make this a little bigger. Can I color code these to know where I'm at better? Would that make,
Yeah.
does that make sense?
You know, like the factor of one color and the ranks, one color. What some do is they color code turnover different from margin, different from return on capital. Yeah.
Should I highlight out to here or out to here? Current, it looks, okay. So where do I want to insert this median EBITDA over here?
They don't put it exactly where you have it on the left.
We'll call it back.
That's the nice thing, if you get it wrong, you'll know because copying the titles over to you.
Yeah, just copy the,
Copy the whole. And you can see how you can go pretty wild with this. In fact, allocating it.
1%.
Well, that's something. So your R squared must have gone up at least one. Or you got the,
69.
So, now you might want to just strategize what you want to add and then add everything and then go back and unsolve it all at once. This is what you're up to now, so those are the only two things I can think of, the change or the average over time, those kind of things. The one that I think is really important is working capital. You brought in a working capital one, didn't you? You did something like working capital revenue.
I don't believe so.
So you might add that one, and you might also do that one over time. So you might do that just like you do asset turnover. So Bloomberg has a working capital to revenue. And that's one you want to be as low as possible. So that was the common one. And then look at it over time as well.
So insert a new column here.
I would put it right next to asset turnover. Maybe after your asset turnover change. I like to keep all the asset turnover stuff together, all the margin stuff together. So yeah, let's go to Bloomberg and see what they have. Type in the word working capital and see what they provide you.
Working capital to sales.
Yeah, yeah. Try that one. So that's one I would do twice, do it once as the ratio, and then do it once as the change. Copy over from. Be careful here because you can't copy over from. You can't copy a lot from the asset turnover numbers.
Where's my scroll bar on here? Why can't I scroll right and left? What's the next piece of that formulated one?
You can copy from, 2000 over.
That makes sense. This one?
I want firms is working capital, getting better control, that's so critical for liquidity and profitability.
All right, now let's get our change in working capital.
Yeah, so put a column right next to that.
Okay.
And you off to the right, before you go off to the right, copy that title.
We'll do 2020 and 2017 again.
Yeah. Column. Once you get used to it, right, you can start flying on this stuff. It's doing the same thing over and over again. So if you copy the wrong one, you can copy the change, you need the title. And we have this one column off. The title, the red, you got one column off on that. On the column to the left, go back over to the left, the very far left. And this column is you control home.
Column J.
Control is right.
No, just the top.
Okay, perfect. So we'll have this to. Perfect, yes.
All right, now let's get the difference.
You might need that if error function. But here on the if error, if you use it. You equal if error. See some sort of difference. And minus and positive 5 this time. Minus boy, something doesn't look right. Why is it such a small number? Go back, go over control, do control right. Wow, they're actually showing it as percentage. That's, boy, Bloomberg is so inconsistent. Yeah, I don't know why they're showing it as. Boy, that kind of bothers me, but yeah, I mean, that's the right number. Why does sometimes they bring percentages in, sometimes they don't, sometimes they don't. All right, so you got it. So now you just need to go find your working capital. You haven't built those in yet, right? So what's it to the right of? It's to the left of gross margin. So go add 2 columns to the left of gross margin. Not changing gross margin, but the next one, 2 columns there. D over twice. Yeah, we'll call D. So here what you have to do is go down to W4, change the column 0 to comma 1. Same thing on the next one. Right, I remember fire is worse than this. All right, let's change those 3% to zeros. Okay, I'm hoping they allocated this one. It's not a waste of time if it gets to 0, because then you know the market doesn't care. It's kind of, you know, like, oh, it's moving. All right, we got something. Let me give you
Still 69.
6%. That's good. You're still over 70 now.
So 69 still.
No, it's good. But it gave you 6%, so it did like it.
We were at 69 before.
Yeah, so you went up 69.4 instead of 69.2.
Gotcha.
But it did give you 6%, so that's kind of nice. But notice what it gave. Notice what it did. It did 0 in W, but it's 6% in X. It also gave you 3% in change in gross margin. So it's liking what you're adding. It's just not having that big impact. So there's all you can do is just keep adding stuff. So you might think about it, you know, it's maybe on the right, just bring in everything you can possibly think of, and you start adding more ratios. It's going to just take some practice to be able to do it, so you can get faster at it. But you can see you're doing the same thing over and over again, right?
Where should we start next time?
Well, you're up to 69, which is a pretty low number, because you're not over 50% on the R squared. You did EBITDA margin, you did gross margin. You might try a return on capital, like a median on return on capital. I don't think there's anything on risk you can do. I think you could fall good enough on that. What would the market be focused on? So you can get even more complex. So like right now you got the 3-year revenue growth. One thing I might try, just out of curiosity, it would take a lot more work, but bring in revenue for 5 years. And then next to that, you calculate, or 6 years, actually, next to that, you calculate the change every year in revenue growth. And then you bring in the median of the revenue growth. Because I'm worried that 3-year revenue growth is really distorted by COVID. Like you got that 354, that's revenue growth.
That's that meta veil.
Let's get a new Yeah, you see what I mean? There's no limits. So if you've gone from a few ratios to now you can go to 1,000. One last thing you can do, Bond, I don't think I showed you this last time. We go in the Bloomberg. Not there, but the green Bloomberg. Yeah, go in there and at the very top, type F2. Did I show you FTW before?
No.
All right, so type FTW. So on the sectors, click on the all sectors and change that to your sector. Consumer, what are you, discretionary or staples? And then under highlights, click on that highlights. And click on profitability. So this is what they say are the most important. So you've already got the first one, right? Turnover. What's MPM? MPM, I don't know what that is. Net profit margin. Okay, you kind of got that with the EBITDA margin. But see, look at that next one. 5-year average ROIC. So that's one you could definitely do. Okay. I don't like averages, but you could try average. And if you don't like average, just change it to median and rerun solver, right? You can in a nanosecond. Right? So what the FTW does is they list the factors that have the highest correlation to the stock market. Okay.
So today we're going to try to explain more of the value with our model.
Which, what is it, class or class?
In class, should be in class. If it's not, let me know. If it's not, I can upload it really quickly. In class, right? Makes sense. Yeah, it's in class, right? Sorry. Does anyone have any metrics that they have in mind that they might want to try? TW.
Yeah, I'm over,
Uh,
so FTW. Wait, sector. Highlight, below style, click on the
Profitability. Second row, third column.
second column, like in the middle. So this is one of the metrics for the technology sector. Yeah, this is it.
Wow.
That's the other thing, over time, that's what they're doing fine, so maybe it's working. That's the only thing we do is looking at things over time.
Yes, sir. Okay. I'm gonna upload my model in there. So you guys should see a new file. It's called tech model. I'm gonna upload it. Should be in there now. This is what I've been doing on my own. It does have the, like, I guess the historical average of a few metrics. So hopefully that could help us explain a little bit more what's going on. So many windows, so many files. Is everyone doing okay today? Reasonably? Let me take attendance quickly. Keelan's here. Alex not here. Angel not here. Drew is not here. Mitchell not here. Bob is here. Will is here. Right. Thank you. Right. Does everyone have tech model opened up?
You put it in the drive, right?
Yeah, classwork. It should be in there. It might be the machine. Not in there?
No, no, I'm not, I don't even think I'm in the folder.
It should be.
Or probably I just didn't even send it right.
Yeah, let me copy and paste it from there. Give me 1 sec. Okay. I sent you an invite. It might take a while. I don't know what the latency is on that.
Got it.
Okay. Instant.
The tech model or the class one?
Tech model. Right. All right. All right. Let's see if we can do this. Everyone in? Everyone good? All right. Great. So we're going to use sales 3-year average growth, and then we're going to be calculating that historical peg. So I went ahead and did that for you guys. It's here in the value metrics, labeled in orange. Need to turn this. Okay. Don't worry about the filter little drop downs. That's when I was messing with the model, trying to get rid of the NAs. If error ended up being one of the better methods. So I just use, if you guys remember to get rid of the NAs, I did if the BDP ticker metric equals Bloomberg's version of NA, input 0, if not, or else just the regular function to get in the metric, to pull the metric in from Bloomberg.
So it shows up as 0, right? So
Yeah.
percentage.
Exactly, yeah. Here I have sales 3-year average growth. Average of that, it doesn't really make too much sense, so we'll probably be changing this to, we'll probably do return on invested capital. So if you guys want to copy F5, so F5, and then paste over P to W5, it should populate on its own, and it should be calculating the average on its own. So that's return on invested capital. We also have a historical average of return on assets. Let's see. Oh, we already have return on invested capital. That's fine. Well, that's a little redundant. We're gonna fix that. Let's look at the metrics here on Bloomberg that we could find using FTW. FWT, what was it? FTW.
Factors to watch.
Factors to watch for the tech sector, and profitability is the style. So we're using return on assets. We could be using return on equity as well. We're using return on invested capital, assets over LTM, which is life to maturity, right? Last 12 months, sorry. 3-year average net profit from continuing operations is a margin. Net profit margin, interesting. Operating margin, we have, I believe. Net profit margin change, estimated. So this net profit margin over time, is that not gross margin? No.
Gross margin is revenue minus expenses. So profit margin is usually EBITDA over revenue.
Okay.
You can bring in gross margin. I don't know. If tech stocks gross margins are low.
We have gross
Stocks
margin.
have like 7% gross margin.
Okay. Yeah, let's try. So we have sale average, return on invested capital, return on asset, net income growth. Okay. Return on asset, return on invested capital, gross, net income. Ranks for all this. Okay. Let's insert a column before return on assets. And then we're going to use the find fields and bring in funded forward net profit margin. Profit margin, trailing 12-month profit margin, net income margin. Let's see. Trailing 12-month profit margin percentage. That's what we want. Right? Is that the same as this one? Yes, right? Or this one? Sorry. Is-
Yeah, I mean, there's a slight difference with the both in there.
Yes, sir.
They don't give you the titles, it's not covered over those.
Yeah. Why are they numbered? Is it like ranked?
Yeah.
Just by
It's based on what has the most,
1-day return?
what's most closely tied to the valuation.
Oh, okay.
Impressions, so it's ranked from most explanatory to least. Yeah.
Oh, yeah. Okay. assessment for net profit margin percentage. of last year's fiscal year. Okay. Trailing, let's see, is it the same? Trailing 12%. It's trailing 12-month profit margin percent. If you look at net profit margin and then go to find more fields, should be somewhere near the bottom actually, which is interesting. Well, they're alphabetical. Yeah, okay. Make sure that you're hovering over the cell, over the correct cell, or else it's going to change a few numbers. We're on E5. We added that. And then just copy paste. 0. Interesting. Oh. Oh, okay. So in D6, if you guys can adjust the formula to get rid of the quotation 0.00, because Excel is reading that as, well, not as a number, but as a character or as a string. So it just said, should say 0 in value if true. It shouldn't change anything, just the way that it's reading this column. And then I want to copy this over, paste that. Interesting. All zeros? Interesting. That's funny. Okay, so this is not going to work. This isn't what we want. So let's get another metric in here. We're looking for a metric that we can explain over time, because we want to get the average over.
Try net profit margin trailing. Yeah, the
This
first one, because I think this is the first sentence, and I was trying to.
Oh, okay. Thanks, Eduardo. Fine. Okay, that's better. Great. So let's go to our historical numbers over here on the right. So we have return on invested capital twice. Doesn't make any sense. Gross margin and net income. So let's copy E5 and then just paste that over this first historical analysis. This first historical. Okay. Should populate pretty nicely. And then we also want to paste that. We also want to make a column, 2 columns. Paste trailing 12-month. Net profit margin here. Sales average 3-year growth. Return on asset and invested capital gross margin. Just one. Okay. And then copy paste this over. Edit the Awesome. And then we're also going to need to change the sales 3-year average to rank. You could just change column to D. So just change all the Y's to D's. Okay. Just highlight these, paste all the way down. And then we can just copy and paste this over. All right. Sorry that the table's kind of messy. Again, this is what I was using. I meant to fix it. This is just, we're moving together. Let's keep moving. All right. So here we could see, well, let's run it again. Everything should be, yeah, everything looks okay. Let's see, no, it doesn't. AH, AQ, AC, B1, BI. Okay. Yeah. All right. So let's run this again. Again, we're going to hover over BX4, data, solver. The parameters should already be in there. It saves it over the file. It saves it in the file. The solver, the constraints, and basically everything, parameters. So if you ever download a file and it has a solver box, you don't have to create new constraints, new parameters. You should be able to solve it. Just thinking, okay. 92.9. Okay.
Always makes you notice something. So always make sure on the factors that related to price. Variables, what are you using?
Sales, profit, asset, capital, gross margin, net income growth, default, net debt. Have we done a cash ratio?
I'm not sure what the cash ratio is, but if you're using that to predict those.
So these are the value, and then this is.
Seems too good to be true, especially for tech, but I mean, do the graph, you know how to do the graph, those two columns. Yeah, it always makes me worried that you have EV or price somewhere in one of your factors, but I don't see it. Yeah. What?
Wow, not bad.
That's the way we look at it. It's 92, you have a correlation of the square.
Correlation, R squared is 86. Yes, sir.
No,
Pretty good.
tech doesn't usually get that high.
Not bad. I mean, given we did only add one more metric and it only explained like point something %. So that's probably not the metric that we want to be using. I ran a correlation of the rank of the metric and the rank of the weighted rank of all the fundamental metrics. Yeah, what am I doing? Just sorry. And it should tell us, I mean, the weights are going to tell us what it's using. So it's not really using 12 or trailing 12-month profit margin at all. So we could probably replace this, yeah, with something else if we wanted to. The correlation to the weighted rank fund here, the correlation of this trailing 12-month profit margin rank and the weighted rank fund is basically 0. So it's not explaining much. It's not helping us much. I mean, return on asset, too correlated either, but it's weighted pretty high, 13% overall. We could change these to percentages to make it look a little better, but it's just up to however you want to format. Hmm. 4. Yeah. It looks a little nicer. It's just, all this number is doing is telling us, based on solver, this is how important this rank is to this rank. And then this number up here is the correlation between this rank and this rank. Yeah. Okay. So what do you guys think? I mean, 92.9, we have 10, 9? Am I missing one? 9 metrics. I mean, that's pretty good. Yeah, we want to be, what was it? What's the word that you like to use, Professor? Concise? It's not concise, it's you emphasized on it last semester in the spring. Wow. Okay. That's cool. I can't remember either. Concise. Parsimonious. You want to be parsimonious. You don't want to have too many metrics that explain very little of our model. You want to have a good amount of metrics that explain, yeah, a good amount of our model here. Okay. Any other ideas? We can look back to the Bloomberg here.
So you just start getting, they talk about 3-year averages, 5-year averages, those kind of things. I don't like averages, I prefer medians because averages are really skewed out.
I see. Okay. If averages are,
You have the bonds, for example, the other one, the 5 or 6 factors. You already have some over time, so you've already got that formula.
yes, sir. So would these averages also be skewed by outliers? Like this,
Yeah.
this has 4 zeros here, just maybe because the company did exist. So,
Yeah, the nice thing about the median is that, if you have errors or zeros, you can only pick out median. Median of 3 numbers is better than an average with a bunch of zeros at 1/6 of the numbers.
yes, sir. Okay. We might need to change our average formula as well, just because I have that string 0 instead of the regular 0. Yeah, sorry about that, guys. So, I don't think you have to go and do this. You could probably copy paste, just in case you can. Do it. And hopefully this doesn't change our correlation too much. Hopefully not at all. That would really not be good if it did.
You done the Bible cell thing before?
I think that's when COVID happened. We were about to do that,
Okay.
and then that's when COVID happened.
Try next week.
Yes, sir. COVID. I mean, yeah, all right. Let's see. Let's go back and cross our fingers. Better. Nice. 93. Okay. We're getting there.